Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 13th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. All right, having that out of the way, let's get this on. We do have quite a bit of economic data coming out today. Across the pond in Europe, industrial production came in at negative 0.8%, was expected to be a negative 0.6%, so slightly worse than expected. Here in the United States, we had core retail sales come in lower than expected at 0.2%. PPI, which is Producer Price Index, came in at negative 0.1%, was expected a positive 0.3%. We had retail sales month over month came in at negative 0.3%, expected a positive 0.1%, and core PPI, Producer Price Index, came in at negative 0.1%, which is expected to be positive 0.1%. On to crude oil inventories. We talked about this quite a bit. I've got crude oil up here. When we had that drawdown of almost 5 million barrels, I bought in, or I got long, I should say, by selling a put spread in XOP. Well, today we came out with crude oil inventories at 6.6 million barrel build, was expected 0.9 million barrel build. So a huge increase in crude oil again. So that got me a little bit worried about my XOP, and I ended up covering that trade, which suppose I could go into it now, but I'll go into it in a minute. Let's go over the market data. Bad news is good news. All these dismal numbers that we were getting today has got to be leading the overall equities to be thinking that the Fed is not going to raise rates anytime soon. We aren't seeing any inflation. We aren't seeing any manufacturing here and or across the pond, and that is leading the equities higher as far as I can see. As you can see here, NASDAQ just off the highs at up 45 points on the day. On the E-mini S&Ps, as you can see, we pushed a little bit higher than this last high that we had at that top. E-mini S&Ps up 14 points on the day. Again, probably off that dismal economic data. As you can see, we are just coming off of the highs that we saw not too long ago, about 45 minutes to an hour ago. So the overall equities still pushing higher. Doesn't look like there's any sign of abating, other than this could be just some longs covering from this big rally that we've had here. E-mini S&Ps, like I said, up 14 points on the day. On to XOP. This is the trade that I decided to cover. XOP, as you can see, is pushing higher. I don't know why JP Morgan's up there, but XOP just now starting to give up ground, I guess, down 20 cents on the day. But in XOP, I decided to cover this because of that crude oil inventory number, and I had on the May 28.30 put spread, and I covered that because, like I said, this crude oil inventory could cause a little bit of bearishness to come into crude oil, and didn't want to be involved in that right now. Originally sold it for 56 cents, bought it back this morning for 38 cents for that trade. So hadn't had it on for very long, just for a couple of days, and decided to cover that one. On to Twitter, I did end up getting my Twitter roll. I rolled it from the April to the May, 21 puts, and collected another 25 cents for that. So my total credit from this trade, going all the way back to the beginning of the year, December, I think 28th was the day I put this trade on, and I collected another 25 cents, like I said. So my overall credit is $2.05, which lowers my basis to just shy of $18. But as you can see, with this big push higher today, that was good timing. If I can get up into that 18 area, that will be nice, and would really love to see it really push higher. But I don't know if that's going to happen or not. But rolled those out. So rolled my GoPro yesterday and Twitter out in time. Wanted to talk about Joy. Joy I ended up covering also, just because I was just slightly over my max profit, 50% of my max profit. I covered this yesterday, so today would be a better day to cover it, obviously. And I had on the May 12-13 put spread in there, and ended up originally collecting 30 cents for that, bought it back for 13 cents. Probably do much better than that today, just because of that big move higher, almost by $2. Anyway, on to General Motors. This General Motors guy is probably not too happy with himself today after putting that stock to me when we were down into the 20, low 30s, high 29 area going in yesterday. He was probably thinking he was looking pretty good by sticking that stock to me. Today, pushing higher up into the $30.68, as you can see there. So those puts would be back in the money today. The great thing about this trade is this guy put this stock to me, right? And because I was short those 30 puts, my deltas were probably close to around 10 or 15, being $1 out. And that means if this rallied, it would only really affect me by my short puts would have only affected me by about 20 cents for every dollar move. But because I got put that stock, I was long that stock. So that gave me 100 deltas. So it gave me about 80 cents more money to the upside. So that worked out really great for me, getting that stock put to me. So just keep in mind that even though sometimes you get that stock put to you, it can really work out in your favor. So that's the way this one did, because I was short those puts. Somebody made me buy GM at $30.50, but in that rally, I wouldn't have been able to participate nearly as much as having the stock. So that worked out really well. So anyway, if you want to check out that Pro Trader Strategies market commentary. Oh, and the other thing was I had no risk on that to the downside because I was long the 30.5 puts further out in time on that calendar for that earnings trade. So I really had no risk. I could end up putting the stock to somebody else at $30.50. So on the downside, I had no risk, but now I've been able to participate much better on the upside because of increasing my long deltas on that. All right, so you can go to protraderstrategies.com and find out more about that earnings calendar setup and go into all the rules and details. I go into that one. This Friday, we're going to be doing one on the strangles. So with this sideways market that we've had, I mean, we've had a lot of movement back and forth, despite the fact that the Nasdaq's up another 45 points today. We really haven't gone anywhere in the last couple of weeks. I mean, we've really been trading in a range. So, if we get a bit of pullback tomorrow, that's the kind of scenario we're looking for, is to kind of have it land right in between there. And with the Nasdaq being right at its point of control, just slightly above it, we could foresee it to come back down there. So that's going to be something that will work into that webinar as well. That's all I got for you guys today. Go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.